There's a reason why some of the smartest investors on the planet believe Bitcoin is heading to $2.8 million per Bitcoin. This isn't a crazy claim, it's backed up by data and math. And in this video, I'm going to walk you through a breakdown that can completely change the way that you see Bitcoin's price. So make sure to stick around because the last part of this model reveals a category of adoption that most people aren't even talking about. And it might be the key to getting there faster than anyone expects. Now, let's dive in. This $2.8 million Bitcoin forecast will blow your mind, and it's backed by data. Bitcoin is still early, and this is why. Here I found this research report by River, which is a Bitcoin company, and they're publishing very interesting research. So I highly recommend you to check it out when you've got time. But in this video, I'm going to give you a summary of some of the most important charts and bits of research in this report. And the first slide that I want to cover is this slide. They're saying that institutions are significantly underinvested in Bitcoin. Now, let's break that down. US investment advisors currently have a net Bitcoin allocation of just 0.006%. And they're managing around $128 trillion of US investment advisor money. And this is allocated across the following segments. 53% of that is in stocks, 10% is in US government bonds, 12.5% in corporate bonds. Then we have some 2.3% in government bonds, 4.7% in cash and equivalents, and then we have 17.6% in alternative investments like gold and commodities, probably also some art. And only 0.006% is in Bitcoin. You see here this small dot compared to all of the other assets that they're managing. So according to River, if these US investment advisors are going to increase their Bitcoin exposure proportional to the percentage of the global wealth that's right now in Bitcoin, then it would require a 36x rise in exposure. So going from 0.006 to 0.2. And this would equate to a 249 billion investment that would be reallocated from these other asset classes into Bitcoin. So meaning that another $249 billion will flow into Bitcoin. That's a lot of money that could send the price of Bitcoin skyrocketing. And why would they allocate even this small percentage to Bitcoin? Well, it has to do with the following. We're dealing with inflation. And if you don't know what inflation is, I almost cover it in every single one of my videos, but inflation is a phenomenon of central banks printing money. And because more money is being printed, there's more money in circulation, meaning that every single unit of money is becoming worth less over time, meaning that with the same amount of money in the future, let's say $100 or $1,000, you can buy less products and services. And the government reports these inflation numbers, and it can be, the US government, UK government, European Union, Japanese government, all of these government institutions report their own inflation numbers. And generally, they measure the CPI. And the CPI is a number that tracks a basket of products and services over time. However, there's a big issue with measuring the CPI because governments, they manipulate these numbers because they adjust the underlying basket or the underlying composition of goods and services, or maybe even the weights or the number of products and services or the composition. So they constantly change the benchmark in order to report the numbers that are most beneficial to them. So here we see a chart that shows the reported inflation by the official the consumer price inflation, the CPI numbers of the US government, and the real inflation measured by actual scraping of price data and benchmarking it over different years. And according to this research by River, the reported inflation is 88% since 2000, so over the past 25 years. And the true extent of US dollar devaluation, measured by actually scraping the real prices of the real basket of goods over time, is closer to 363%, meaning it's almost 4 times higher than the actually reported inflation numbers. And Bitcoin is actually the best performing asset class of the past decade. Between 2010 and 2020, Bitcoin generated 230% annualized returns. So if money is losing value at such a rapid velocity, at such a rapid pace, then you need to have an asset that can hedge against the devaluing of money. And because Bitcoin has such a strong track record, it is attracting more and more players into the asset class. Now the institutions are waking up to Bitcoin because they understand that it is a superior hedge against inflation. There's almost no other asset out there that can help them to not only protect themselves against inflation, but also to gain a lot of purchase power, or to generate really high returns along the way. And if we zoom out and we look at Bitcoin's adoption, then according to this research report, then we are at roughly 3% adoption of Bitcoin. And this is comparable to online banking in 1996, to social media in 2005. Imagine, now it's very hard to imagine life without online banking. I mean, I have multiple banking apps on my phone, and I rarely ever go to a banking branch. But in 1996, this was a completely new phenomenon. I'm not sure if you're watching this video right now and you've experienced that period, or if you're just like me, a millennial, and you were just a few years old. I didn't consciously experience this, but I definitely experienced the rise of social media in 2005. I remember creating my first profile on Facebook and other social media sites, or the internet in 1990. So yeah, that is roughly where Bitcoin is at, and that's really early in the adoption cycle. So let's compare it, for example, to the internet of the 1990s. The internet was invented in the 1950s as a military technology. Later, it was adopted by academics and universities. And only in the 1990s, it started to become mainstream, and the average person started to have a computer at home. So that's when we saw the rise of, Internet Explorer, Netscape, Windows, Intel. And that really started a massive revolution. Again, right now, I couldn't even imagine a life without the internet. And similarly with online banking. In 1983, the Bank of Scotland provided the first form of online banking. In 1996, the Atlanta Internet Bank started the new age of online banking. And in 2008, Apple launches its first iPhone and marks the starting point of mobile and online banking. And now, again, we are at a point where barely anyone can function without mobile banking. So Bitcoin is where the internet was in the 1990s, where mobile banking and internet banking was in 1996, and where social media was in around 2005. So in 2002, we saw LinkedIn and Friendster. In 2003, we saw the rise of MySpace. 2004, we saw Facebook. 2005, we saw YouTube. 2006, we saw Twitter. 2010, Pinterest, Instagram. 2010, Snapchat. 2013, TikTok in 2016, and Threads, which, if you ask me, is kind of a failed app, but still. If you were in social media in 2005, it would be a completely new space with all of these small social media platforms which were trying to figure out how they were going to grow, how they were going to create value, and how they were going to maximize the amount of time that people would spend on the platform. And now, again, my whole network, all of my friends, my family members, I kind of keep in touch with them through social media, through Facebook, through Instagram, through WhatsApp. So life without social media is kind of hard to imagine. And Bitcoin was invented in 2008, 2009 against the backdrop of the previous financial crisis, the mortgage crisis. And it's still a very young and yeah, it's still a very young technology, but in a very short time, it has gained a lot of adoption by individuals, institutions, and even countries are talking about establishing Bitcoin strategic reserves. But imagine where Bitcoin could be in 10 years, in 20 years, in 30 years. Most people are blinded by the short term price fluctuations of Bitcoin, but instead, you should be looking at the longer term trajectory, especially if you compare it to other big revolutions that involve networks and network effects like the internet, mobile banking, social media. Um, Before we continue with this video, yeah, do me one quick favor. If you enjoy these videos where I break down complex developments in the world of money, finances, and crypto, then make sure to smash the like button and subscribe to my channel, because I'm going to be posting regular videos just like this one to help you to make sense of everything that's going on so that you can maximize your profits as an investor. Now, let's continue. So, one of the biggest forms of adoption, because that's where the biggest money is institutional adoption. And although we've seen large institutions get into the market in the past year, the BlackRocks, the Fidelities, we are still very early. And in this research report by River, they're making a very strong case for that as well. So the US Bitcoin spot ETFs were approved last year, 2024, and within a very small time frame, because 1 year is just a blip on the radar, they gobbled up more than 1 million Bitcoin, and they pumped around $100 billion of money into Bitcoin. In fact, in the previous year, 2024, the largest activity within the Bitcoin market wasn't retail investors, it was institutions. So we see hedge funds getting into the market, investment advisors, asset managers, market makers, governments, banks. Yeah, a lot of big guys entered the market, but we're still very early. Right now, around 52% of the top 25 hedge funds and RIAs own Bitcoin ETFs. So hedge funds and registered investment advisors, RIAs, collectively manage over $135 trillion in the US alone. While the total exposure exceeds $30 billion, guys, just so you have some perspective, $30 billion compared to $135 trillion is nothing. It's just a small drop. While the total exposure exceeds $30 billion, allocation sizes remain relatively small. However, they have increased each quarter since the launch of the ETFs. So here you see firms with more than $1 billion of asset under management, so 143, and RIAs 458. Percentage of the top 25 largest firms by AUM with exposure, so 52% of those firms and 52% of those RIA. Weighted average Bitcoin allocation, so of the hedge funds, it's less than 1%, so 0.24%. And again, RIAs, also registered investment advisors, less than 0.02%. So that means that they have just a fraction of the assets under management that they're managing in Bitcoin. And if they increase it to just, what was it, 0.2%, which is aligned with the global average, then it means that $250 billion will flow into Bitcoin of the $130 trillion that they're managing. So that's a very interesting insight, guys. Here is another breakdown: Bitcoin ETF ownership distribution. So we're seeing a lot of hedge funds that are owning these Bitcoin spot ETFs, a lot of asset managers like BlackRock, Morgan Stanley, D.E. Shaw, Invesco, Wellington Management, sovereign wealth funds like the okay. It says that the United Arab Emirates is the only such fund with exposure to Bitcoin ETFs. Interesting. Non-institutional investors include individuals, small funds, and holdings in IRAs and other tax advantage accounts. So, in short, it's saying that yes, a lot of these Bitcoin, there's a lot of a lot of people have bought these Bitcoin spot ETFs, institutions, individuals, hedge funds, asset managers, sovereign wealth funds, but it's still a very small fraction compared to the larger pie. So if all of the other hedge funds, asset managers, sovereign wealth funds, banks, pension funds, insurance companies, if they also start to allocate a portion of their portfolio to Bitcoin, then still there are many billions and even trillions of money that can flow into Bitcoin. So yeah, right now Bitcoin is almost at $100,000, but still we're very early and Bitcoin is still very cheap if you compare it to its future growth potential. Let me know in the comments below if you agree with me. Now, the next important factor in Bitcoin's adoption is all of the corporate Bitcoin adoption, which is happening right now. Not that long ago, we actually saw that GameStop, the original meme stock company, they're sitting on like $4 billion of cash, and they raised another $1.4 billion of debt, which they're going to use to buy up Bitcoin. And they're not the only one. Strategy, previously known as MicroStrategy, was actually already holds more than 506,000 Bitcoin. Semler Scientific, Meta Planet. Now we also have a European publicly traded company which is buying up Bitcoin. So businesses have accumulated over 1,000 Bitcoin per day since January 2024. Of course, there's also outliers because Strategy is the largest of those, which is accumulating the most. But yeah, Strategy right now, we're a little bit later, or this chart is already slightly outdated because Strategy is holding 506,000 Bitcoin. Maybe by the time that this video gets published, they're already holding a lot more. We see that these mining companies like Marathon Digital, they're also holding a lot of Bitcoin and they're also raising debt to buy Bitcoin. Other publicly traded companies, private companies are also buying up Bitcoin. So in addition to institutions, we're seeing that these corporations are buying boatloads of Bitcoin. And we're also seeing let's get to that in just a little bit. But you see that public companies, their holdings have grew with 80% in 2024. So the number of public companies holding Bitcoin grew by 139% since 2023. Okay, that's even crazier. And even though its adoption as a treasury asset remains below 1% of all publicly traded firms, okay, the S&P 500 and Nasdaq 100 have 2 and 3 companies with Bitcoin holdings respectively. I believe those are Tesla and Strategy, and I don't know who the third one is, but yeah, even those big companies are now holding Bitcoin. We're seeing the rise of the Bitcoin Standard company. So an increasing number of companies are using Bitcoin as their primary treasury asset instead of cash, corporate bonds, government bonds, you name it. And the main vehicle for holding retained earnings rather than distributing those earnings through dividends or share buybacks. Exactly. So MicroStrategy kind of created this playbook because in 2020, they announced to the world that they were going to buy up Bitcoin with their excess liquidity. And in the past 4 to 5 years, they have way outperformed all of the other stocks on the stock market. And everyone wants to get a slice of that. And as a result, they want to also adopt this Bitcoin strategic reserve strategy. So some of the biggest holders are Strategy, the company Tether, Binance, and Marathon. And now these companies are measuring their performance with an indicator called the Bitcoin yield, which measures a company's performance based on their ability to increase the number of Bitcoins per share, the sats per share. Interesting, right? So here you see that MicroStrategy was able to increase their Bitcoin yield with 103% in 2024, meaning that the number of Satoshis per share of MicroStrategy increased with 103%. It's just an interesting way to measure the performance of a company if their goal is to become a Bitcoin treasury company. And on top of that, on top of the institutions, on top of the corporations that are getting into Bitcoin, we're also seeing that nation states are now entering the arena. especially since Donald Trump got elected. We're seeing a lot of very favorable laws and regulations come out, and this is being resonated throughout the rest of the world. So 34 countries have approved Bitcoin ETFs. The US now allowed banks to custody Bitcoin. Venezuela, interestingly, banned Bitcoin mining. Bolivia legalized Bitcoin in 2024. Argentina legalized Bitcoin payments in 2023. Russia legalized Bitcoin mining in 2000. Bitcoin mining and Bitcoin usage in international payments in 2024. China banned Bitcoin mining. Hong Kong allowed investors to access Bitcoin in 2023. Turkey legalized Bitcoin payments, and Nigeria legalized Bitcoin in 2023. There's 4 countries with less access compared to 2020. So that's China. I don't know who the other countries are, but Venezuela as well. There's 9 countries which have ruled out the usage of Bitcoin. So China, Afghanistan, Egypt, I think this is Morocco, Venezuela, and a few other countries have actually banned Bitcoin. Some other nations that previously banned Bitcoin are now embracing it. So more than half of all of the countries that have outlawed Bitcoin have since lifted these restrictions, with 5 countries unbanning or officially legalizing Bitcoin since 2022. It is likely that Bitcoin will be widely banned by government. It's unlikely that Bitcoin will be widely banned by governments in the future. Afghanistan is the most recent country to ban Bitcoin. In August 2022, the Taliban prohibited all Bitcoin trading within the country. Taliban authorities. And Morocco is the most recent country to lift its ban on Bitcoin in 2024, ending restrictions that had been placed in 2017. All right, yeah, I believe that's a very positive wave that we're seeing for Bitcoin, especially seeing that many countries were previously against Bitcoin and crypto, and they're now lifting all of these laws and regulations and restrictions, and slowly they're embracing Bitcoin. There are around 18 nation states that own Bitcoin. So El Salvador is buying up 1 Bitcoin every single day. We see state-backed Bitcoin mining in Bhutan, in Argentina, in Brazil, in Ethiopia, in Iran, Oman, and Russia. There are some countries that own Bitcoin because they seized it in lawsuits. So the United States, United Kingdom, China, they used to own a lot more Bitcoin. They owned around 200,000 Bitcoin, but they recently sold a lot of their Bitcoin. Venezuela and Finland, they own Bitcoin because they seized it in lawsuits. And then there's indirect exposure via government investment in the UAE, in Norway, in Switzerland, and North Korea also owns a lot of Bitcoin, or not a lot, like 778. At least that's what's known. And then Ukraine received a lot of Bitcoin donations when Russia invaded Ukraine in 2022, 2021, 2022. Yeah, a lot of people sent Bitcoin to Ukraine as a donation to help to defend the country and to help to rebuild it after a potential invasion. Now, why could Bitcoin go to $2.8 million? Well, right now, less than 4% of all people own Bitcoin. And this is a very interesting data point. Remember how we compared the adoption of Bitcoin with the internet in the 1990s, with mobile banking in 1996, and social media in 2005. Just a very small fraction of the people were making use of those technologies, and Bitcoin is right now at a very similar stage. So less than 4% of all people worldwide own Bitcoin. Now we see that in North America, 10% of all people own Bitcoin, South America, 6.6%, Africa, 1.6%, Europe, 3.4%, Asia, 3.6%, Oceania, 3.3%. And as time passes, and regulation improves and education improves and people gain more experience and Bitcoin matures as an asset class and maybe becomes a little bit less volatile and maybe over time becomes like an Amazon stock or Meta stock or Google stock, then I think it's a very legit and plausible assumption that a larger fraction of the global population is going to start owning Bitcoin, just like they own the S&P 500, just like they own real estate, just like they own gold. And it's just going to become an integral component of the everyday investment portfolio. And right now, we're still very early. So this was my thesis, or actually River's thesis, but I reworded it and I added my perspectives to this slide deck. And I'm really curious to hear your thoughts. Do you believe that it's possible for Bitcoin to grow to $2.8 million per Bitcoin in the next decade? Let me know in the comments below. Type yes if you believe that it's possible, and type no if you believe it's not possible. Thanks for watching. If you enjoyed watching this video, do me one quick favor, smash the like button. For me, it's good feedback to understand whether you liked this video or not, and whether I should make more of these videos. And if you haven't done so yet, also make sure to subscribe to my channel, because I'm going to be posting regular videos just like this one to help you to make sense of everything that's going on, so that you can position yourself for maximum profits in the market. All right, hey, thanks for watching. Take care. Peace out, and I'll see you in the next one.